What's going on, guys? It's your boy Tim Aslan here with Counter Trend Capital. Today we're going to be looking at the stock market, specifically AT&T, because there's a setup on here that I think can be very rewarding. So I wanted to bring this to you guys' attention, and I further want to reiterate that we don't only do crypto on the channel. We also look at stocks, equities, commodities, so expect some more of those videos. Recently, I've been getting more into Forex as well, so you should expect some videos on that front if I see any larger time frame setups. So the reason I wanted to make this video about AT&T is because there's a pattern playing out here that can potentially take it to all-time highs. Obviously, the other equity markets, the other indices have been doing very, very well. Meanwhile, this one has been on a very steep declining downtrend. We're at prices that have not been seen since 2003 and 1994. So if you've held this stock since January 1994, you would be at the same exact price, which is absolutely crazy to me. However, at least you've been getting paid dividends the entire time. So, depending on how big those are, you might be still positive. So anyway, what I want to first address before I do any, further technical analysis is that this area clearly is a sign of strong support. So if we do break it, we don't have much support until around the $8 mark right here. So this is a very crucial area, and I think that you can have stops around $12 area, because if it breaks down here, it looks like it'll be a longer way down. Furthermore, this looks like a classic swing failure pattern. So obviously there's a swing failure of this low here, but there's another swing failure of the more recently made low in October, which is interesting. Now I'm gonna show you guys what I have as far as Elliott wave theory. So to me, this looks like a triple wave move down here, followed by another triple wave here with one last triple wave. So I would label this as a W, X, Y, and then within that we would have two ABCs. Let's change the color. So we have an ABC here, ABC right here, and then one last ABC right here. So now let's check our trend-based fib from the top to the bottom of Y to X. You can see we've perfectly tagged that 618 at 1395 and had a very nice reaction off of that. Furthermore, we have some confluence from the micro ABC. We can go from the start of A to the top of B, and we have a perfect hit on the 1.23 right here. So when I see matching targets like that, it's usually a higher success rate, which is really nice to see. And keep in mind, this is the monthly time frame, so this can take a while to play out. Furthermore, if you look at the RSI, we have a triple bullish divergence going from November to September to now, where price is declining, yet RSI has not made new lows. So that's very positive to see, as well as if you look from 2003 RSI, we are lower in price. However, we have not broken that low on the RSI recently. So that's another very good sign that price is getting absorbed, and this is bullish. Selling pressure has declined since then. Next, I wanted to show you a harmonic pattern. So we actually have a bullish shark pattern on the monthly time frame, which is huge. I think this is a really, really clean pattern. All ratios are valid. 1.16 down here. So I think that the minimum for this pattern is at least a 382 retracement. So my bearish case is $21 for this stock, which is a 45% increase from current prices. Now, sometimes these patterns fail in extreme bearish conditions, which if the entire SPX and NASDAQ rolled over, could just tank the stock as well. However, I think the risk to reward ratio is excellent because, like I said, stops can be around the $12 mark. If you want it to be extra safe, it can be down here below this 1.618. But I would rather get stopped out and re-enter there. But that is a micro target. So the targets that are more important are the macro ones, which I showed earlier. So I think if we do lose this $12 zone, the next area is at $2, which there's not even price history down there. So that would be the extreme bearish case. So that's why it seems to me why we should go up here and potentially breaking all-time highs, because usually on a pattern when there's a larger WXY, once we do complete the Y leg, the next move up should be impulsive and break these highs right here. And you know, a lot of these tech companies have been rallying. Usually there is some sort of rotation. Fund managers will be getting their money out of stocks like Apple and Nvidia and trying to find the next stock that will go up. That's why I think the RSI is diverging here, because you see a lot of hidden buying pressure that can definitely send this stock to all-time highs. So that's all I have for you today. Keep a lookout for a new Bitcoin video update coming soon. And if you are more interested in these stock videos, please leave a comment down below so that way I know, you know, that you guys want more of this type of content. Definitely hit subscribe and share the video with your friends. And I look forward to seeing you next video.